Hello again, everyone. In this technical analysis of the stock market video, I call it tension builds because that seems to be what's happening right now. As we're in an extremely overbought situation, it is the third most overbought position that we've been in since the March 2020 low, and I'll talk about that in a minute. We're near the end of an Elliott Wave pattern, and we'll look at that on the S&P 500. And we've got earnings season starting next week. So let's dive in here. The S&P was up 31.63 on Friday, but Friday was the lowest trading volume day since Christmas Eve. That's pretty amazing given what's going on in here. And we're sitting up here for the week. Let me just show you what's going on with that. If I can get a hold of this little bar over here. Okay, we're up 100, almost 109 points for the week. Big bullish looking type candle. Okay, there's no doubt about it. We've had a tremendous move, big momentum in here. So we're sitting at 77.5 on the RSI. Now I use a 10-bar RSI. So, and that's fine. So a lot of people use the standard 14-day, etc. Some people use less, some people use more. But as long as I'm using the same number for comparison, then it works. So what I'm looking at is back over here. These are the other two situations since the March, let me give the whole picture. Since the March 2020 low, there have been two other times where we got as extreme or greater than where we are right now. And back in early June, we got to that level, and about 3 days later, 2 to 3 days later, we had the peak, and it wasn't surpassed for a month. Then towards the end of August, we had another situation where we got as high as we are now. And about 6 days later, we had the peak at September 2nd. And then we didn't surpass that level for a couple of months. Now, we're at a much different stage of the game than where we were back in those two situations. We're near the end of this pattern. I'm talking about a very large corrective pattern here. It's ABC for the B wave. And within this C leg, this last leg up, I was looking at 5 waves in here. We're in the 5th wave, and we're getting very, very close to the end of this 5th wave in terms of the wave pattern. Right now, the way it looks to me is that we have completed this 3rd minute wave in here. We should get a small corrective wave. It should be choppy to sideways because we got a very sharp pullback here for wave 2, and then one more little push up here for wave 5. So watching for this kind of development, that's what I'm looking for. This is not meant to be predictive. This is in terms of this wave 4 where I've got 4 and where I've got 5. It's just a path forward at the moment. Okay, so that is the picture there. Now I mentioned where we are in the pattern. What's interesting is this whole data about the volume dropping off. And let me pull this up for you. This was in Bloomberg today, and we're talking about the volume here dropping off since the end of January. 5-day average volume on all U.S. stock exchanges. Look how this has dropped off, and it's dropped to a level that's down here where it was in October. Okay, so quite a bit of an extreme in terms of a drop off. But the other thing I noticed is that we also had that kind of drop off from about early to mid-June into the end of August, similar to what we're seeing right now. Well, then let me go back to my cursor so I can find where this is. Okay, well, we just talked about from early to mid-June, so right in here to the end of August. Basically from part of the middle of the 4th wave to the 5th wave of A. And now we're talking about from the end of January, so here's February, here's the end of January, up into here. This is towards the end of what I've got labeled as the 3rd wave, encompasses the 4th wave, and then the 5th wave of wave C. So a lot of similarity, tremendous drop-off occurring in trading volume here when you would think the enthusiasm would be staying with the move to the upside. It doesn't seem to be in terms of the volume. Okay, so I think that's a big flag that's waving, and I wanted to make sure we pointed that out today. Okay, now I want to take a look at what's happening on the interest rate front, and this is the scenario I want to look at. That other one was another one, a scenario that I haven't updated. So here's what we're looking at with TLT. It was down 50 cents on Friday. We're looking for a fourth wave in here, and I just don't think it's materialized yet. I'm expecting it to kind of chop sideways after the little pullback that we had, but it's really unclear in terms of what it's doing. But where I expect this to go is after we complete a fourth wave, is to have one more push down and complete the 5-wave move. And I'm talking about this 5-wave move right in here for wave 1. Let's take a look at the weekly view. Here's what we've got, and here's what we're looking at. Okay, so here's that 5-wave move that I was talking about, and completing this 5-wave down here for wave 1 of intermediate wave 3. Yeah, I think that, we've had a major peak in the bond market. We've had literally a 40-year bull move in bonds, and now we're getting that corrective action. So let me go back to the move. I want to go to the moving average view because I like looking at TNX, which is the 10-year yield, in this way. Now, here's where TNX is sitting. It's sitting at when you round it, 1.67%. That's the way you read this, okay? And we're up in what I've got labeled as a resistance zone. Where is that coming from? Okay, well, it comes from the consolidation that occurred back over here in February 2020 and the consolidation that occurred in the fall of 2019 into January of 2020. And right in the middle of all of that, and so it's created a little zone. So far, TNX has just been kind of hanging in there. Hasn't really done anything yet. So it's going to be really interesting to see, can we push above that zone and start getting up towards 2% on the 10-year yield? That is going to get very interesting when we do, if we do and when we do. Okay, so that is the TLT and TNX. Let's take a look at the dollar index. Now, the dollar index has had quite a bit of a pullback here lately, but here's the bullish scenario, and that's what I think is going on. We had a significant low back here in early January. We've rallied up in here. I think we're in a fourth wave pullback. I'm expecting this to go higher. Now, we had a very sharp wave 2 pullback in here, and that's why I actually was kind of surprised that we pulled back this sharp and this deep this quickly. I really was expecting more of a sideways type of move, and we may still get that. So we're keeping an eye on that, but that's what I'm looking for here with the dollar index. From a weekly perspective, long-term picture I think is bullish on the dollar, and that's what I'm looking to see. But you've got to get 5 waves at a time. First impulsive wave needs to complete, and we're not there yet. So that is the picture, and then where I think we're going to be heading higher is in a 5-wave move up in a cycle wave 3. Okay, so that's the picture on the dollar index. Now I want to do an update on Apple from last week. Okay, in this view, all I'm focusing on, let me get rid of the crosshairs for a minute, is this move down right in here. And last week I was talking about how we had this converging triangle in here, and I really was looking for a major breakout to the downside to complete a 5th wave. And it was looking very nice. I thought we had a beautiful one, beautiful setup and waiting for the breakdown. Well, that didn't happen. Well, where does this go wrong? Well, here's the deal. Wave E cannot go above wave C, okay? It invalidates the wave structure for a triangle. And as soon as that happened, even just 1 penny above C, I knew this was failing, and we got out of the position that we were in, cut the losses, kept the losses minimal, and and it was a nice setup, nice thing to get into from the standpoint of tremendous potential upside, but yet could limit our losses here, knowing that if we got above the C level, we are out. Okay, so this is what happened. It just continued to push higher in here over the last week. So what do I think is going on right now? Okay, here's the bigger picture. I still think we're in a flat. I just think right now that what happened was that we had a first minor wave 1 down that finished. And what we're doing here is a double zigzag. Okay, so I think we have a WXY going on. Look how deep we've retraced for this wave 2. We're almost to 61.8% of wave 1 down. Okay, so I think we've got some corrective action that's been occurring in here. We had a triangle for this X wave, and here's the triangle I've got, the way I've got it labeled in here for the X wave. And now what this looks like, although it's hard to tell it at the daily chart, is a zigzag pattern. So we got a double zigzag here for right here for the W, and then another zigzag for the Y. And here's what I'm looking at when I go to the 2-hour chart. This is the zigzag that I'm seeing in here. Now I need to line that back up over here with the top of that bar. There we go. Come on, C-Wave. All right, so that's what we're looking at. And these are just some other measures that we're looking at for comparison to see where this might end. C versus A, here's where C equals A in terms of this zigzag pattern right here. So we could continue to push a little bit higher. Here's 61.8% of 2 versus 1. Okay, so that is the picture on Apple. I think we may be getting very, very close to the end of this second wave, and I'll be watching for the price action to confirm that we're rolling over. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. Hit that little bell in there too. I think it's what it'll do is it'll notify you when I post a video. And if you'd like more of this kind of information on a daily basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great weekend. I'm going to go watch the Masters.